Hello, welcome to the European Open briefing for Monday, September the 4th. I'm Rafi Bajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So the first week of September hasn't gotten to a very positive start. North Korea conducted another nuclear test over the weekend, and this has led to a fresh surge in demand for safe havens, particularly gold, which is at an 11-month high. Although overall we're not seeing too much of a overreaction in the markets, but that risk of sentiment is nevertheless weighing in currency markets. The dollar is down against the yen, and the dollar was actually in fact already under pressure on Friday following that disappointing non-farm payrolls report for August, where the headline figure came in below expectations. We did see other currencies briefly spike up against the dollar in that initial reaction to the NFP report, but the dollar quickly reversed its losses, and the euro did fall back after a brief spike up. And excluding that spike, the euro has been pretty much range bound over the past few days as investors remain cautious ahead of the ECB policy meeting this week on Thursday. And another central bank meeting this week is the RBA. They're due to meet tomorrow, and the Aussie is down ahead of that meeting, although we also had some disappointing data out of Australia this morning. So let's have a look at what's happening in North Korea. North Korea said that it conducted, it successfully has developed a hydrogen bomb, which could potentially be loaded onto long-range missile. This would make it its sixth and most powerful nuclear test yet. Reports said that the explosion caused an artificial earthquake with a magnitude of 6.3 on the Richter scale. South Korea, in response, has carried out live fire missile drill this morning in a simulated attack on North Korea. The US response has been a little bit more measured. The Defense Secretary James Mattis said that any threat to the US or its allies will be met with a massive military response. And President Trump, when asked by reporters about the latest incidents, he said, "We'll see," regarding the US response. The impact has been most notable on gold. It did hit an 11-month high, $1,339.47 an ounce this morning. Dollar yen, we can see opened sharply lower. We can see that big gap in dollar yen in the middle chart here. It opened 0.8% down before sliding to a near one-week low, 109.29, ahead of the European Open. Swiss franc is also up. You can see also dollars franc has a gap there. It fell briefly below the 96 level before climbing close to that level. Asian stock markets are down, but it's not panic selling. It's just basically sort of cautious selling of risk assets in response to the latest incident. Looking at the dollar index, we can see that reaction on Friday to the NFP report, where dollar briefly tumbled before recovering its losses. It was helped by a stronger than expected ISM manufacturing PMI. But let's look at the NFP numbers now. The US economy added 156,000 jobs in August. Expectations were 480,000. We did also see a downward revision to the prior 2 months, totaling 41,000. The jobless rate edged up from 4.3 to 4.4%, and most importantly, wage growth was unchanged at 2.5%. Expectations were for it to tick up to 2.6%. This means that Fed is unlikely, judging by these data, to raise rates further over the coming months, particularly odds of another rate hike in 2017 by December remain well below 50%. But of course, although it did fall below expectations. It's not really a weak report. It's just doesn't really do much to inflate expectations of higher consumer prices. And overall, the US economy isn't doing too badly. The ISM manufacturing PMI rose to a 6-year high of 58.8 in August, so that is giving some support to the dollar. Looking at the euro now, because of course we do have the ECB policy meeting on Thursday. Last week we had some reports where, according to ECB sources, speaking to Reuters, they did say that ECB policymakers are becoming more concerned about the euro's rise, and that the ECB will not be making an announcement on stimulus withdrawal in September, and that will probably come in October. But we did have a couple of ECB Governing Council members speaking on Friday, and although both indirectly suggested that policy withdrawal will be very gradual, they didn't seem overly concerned about the euro's rise. ECB's EU Nowotny said that he would not overinterpret the euro's recent gains. And on Saturday, we also had the EU's Economic Commissioner, Pierre Moscovici, saying that the euro's level is not threatening the performance of European companies. So this is contrary to those alleged reports we heard last week. We can see the euro has been mostly flat over the past few days, currently trading just below the $1.19 level. Let's have a look at the Australian dollar now, because we do have an RBA meeting tomorrow. We had business inventories numbers for the second quarter today. They showed an unexpected contraction of 0.4%. Expectations were for a growth of 0.4%. We can see the Aussie is down from Friday's highs. It's kind of around quarter of a percentage points lower on the day. We're also going to have the second quarter GDP figures on later this week, and this we'll see whether or not this is going to boost the Aussie, because the Aussie has been consolidating since late July. We've had a risk-off sentiment relating to North Korea hurting demand for risk-sensitive currencies such as the Aussie and the Kiwi, as well as exchange rate warnings by RBA policymakers. If we do see a more upbeat RBA tomorrow and stronger and better than expected GDP numbers this week, they might lift the Aussie back towards 2-year highs. It's going to be a very quiet trading day. The US and Canadian markets will be closed for Labor Day celebrations. In terms of data, we're going to see the Eurozone Sentings Index and producer prices, as well as the UK construction PMI. That's it from me. Thank you very much for watching, and have a great day.